What's up, everyone? Good morning again. It's your host, Carlos Ponce, and this is another live episode of Advancio Talks. And if you just discovering us, well, welcome. And if you've been here since the beginning, you know what we're about. So, Advancio Talks is where we sit down with the people actually building the future of business and technology, not just talking about it, but doing it. CTOs, founders, the folks making decisions that matter. So, whether you're drinking coffee, commuting, or just curious about what's actually happening in tech and business, stick around because today we got Kevin Chavanne, venture partner at Tenity, with us today, and Kevin's got stories and insights you won't find anywhere else. So, let's jump right in. Welcome to the show, Kevin. It's a pleasure to have you here.
Hey guys, thanks for having me, Carlos.
Absolutely. We look forward to this conversation and see what we can learn from it. Okay. But let's start with you, Kevin. Let's start with you first. I mean, you're the star, you're the guest. So tell us and the audience a little bit about you. What's your background? Where you come from? Tell what's your story here.
Cool. Well, yeah, I have somewhat of an exotic story, especially if you're out there in the US. You'll hear it along the podcast, I guess, but I'm not native US speaker or anything. I'm French by birth. I moved out of the country over 10 years ago, and I didn't move to the US. I actually moved to Estonia, right below Finland, next to Russia. I I had moved there to do my studies back in the days because Estonia was actually very famous in Europe for the use of internet communication technologies for administration, public administration. The country was the first one to kind of bring in the e-voting, what we call e-society here, where all public services are online. I want to specialize in that kind of stuff. And as I came to study here in Estonia, well, over 10 years ago, I actually got taken onto the VC rabbit hole and started to work for multiple VC firms, investment firms, and and, uh, and I kind of like worked all around the world since then. Worked out of Spain for an investment platform, out of Copenhagen, Denmark, to invest across Scandinavia for some time. I used to live in the US, in LA, for some time as well. Came back to Europe with COVID, and I'm back in Estonia for the last 3 or 4 years now.
Wow, Estonia. That's right around the corner, right? Is it? Not exactly, but I bet I haven't been to Estonia, but I've
Very
heard.
cold.
Yeah, yeah, I've heard it's cold. But all right, so Kevin, let's see. Tell us a little bit about Tenity. What is Tenity, and how did you end up there?
Yeah, I mean, just to give you a little bit of context, like I said, I was working for multiple investment platforms in the past. So my background originally was working for what we call equity crowdfunding, which is the idea of co-syndicating investors onto what we call SPV, special purpose vehicle. The idea is to syndicate investors onto a single entity to then invest in early stage companies. And we had launched a platform out of Estonia years back called Funderbeam, right? So I kind of like started my investment career working for early stage investment firms, etc., all across Europe, like I said. And as I actually came back to France for some time, I was working for a very famous guy called Anthony Bourbon. You have the Shark Tank in the US. We have an equivalent in France. So I was working for the guy who is kind of like heading out Shark Tank in France. He wanted to put together an investment platform for very wealthy people to kind of like invest with him in early stage projects. So we'd be doing like 1 to 2 million euro checks on seed companies. And as I stepped out of that role when the platform was rolling, I got a call from a friend of mine out of Sweden who was looking for someone to launch the VC initiative of Tenity in the Nordics out of Tallinn, Estonia, where I was based. In a very few words, Tenity was born out of the Swiss Stock Exchange, as a collaboration with the innovation department of SIX, the Swiss Stock Exchange. They had an innovation house working closely with the banks, and as a that they launched a VC that was investing in pre-seed companies, and they also launched an accelerator. And at the time, about 3 years ago, when I started working for Tenity, I was spearheading the VC side of the equation, and my colleague out here in Estonia was working for the accelerator side. So we were doing super early stage investments specific to fintech and insurtech because our LPs were the banks and insurance companies. So among the LP set, you had banks and larger insurance companies. So we're catering to that space specifically, which I think, and as far as I heard, you guys are interested in the insurtech sector. So I guess I
Right.
worked a little bit with the insurance guys. Yeah,
That's
that's
interesting.
what Tenity is about. Yeah, yeah.
Excellent. Thanks for elaborating on Tenity a little bit, Kevin. Okay, so let's move right in. We have a topic. We have a theme today to discuss, right? And the theme for today is fix it before funding. Venture capital audit every founder needs before pitching anyone. So I like my first question is, why did you feel that this topic was relevant for this day and age? Let's start there, please.
It's actually a very interesting question that you bring up, and it's a very trendy thing going on for me, at least these days. So, like I told you, for the last 3 or 4 years, I've been running an accelerator and I've been investing in early stage companies with a VC arm. And and I kind of came to realize helping out companies because when you run an accelerator, you hire a bunch of people to kind of like mentor, advise, run some workshops or whatsoever. And I never really managed to find anybody who could really explain the VC stuff. So I was just doing it myself, kind of like explaining early stage companies how VCs actually work. And and when I when you're a VC, you'd be meeting maybe 20 companies per week, and you reject like 99% of them, right? So
Hmm.
over the course of my career, I started to see the patterns on what are the weaknesses that actually can be fixed among early stage founders. So I started to put together workshops that I've been running at Tenity for some time in the accelerator. But then I was being called in here and there by other accelerators. Plug and Play calls me a lot to run workshops for early stage companies, you know, around the world. I was in Uzbekistan last week. I'm going to Armenia next week to kind of like run workshops on understanding the VC space. And and as I was running the workshops and putting all of that together, what I realized is that majority of startups are getting rejected by VCs for several reasons, but one of them being that startups don't really understand how VCs work. They don't understand the scalability requirements for VCs. What is the VC grade model that allows to turn a company into a fund returner, right? And the fact that companies don't understand that properly, don't get the feedback properly on that specific regard, kills a lot of deals. And and I kind of came up with the idea of putting together a toolkit for founders to get what we as VCs write about them all the time. So the way it works is that you'd be meeting companies, you like one of them, you start working on the case, you run the due diligence, and you write an investment memorandum, which is basically like a whole summary research and investigation on the company where you drop in your views for the partners at the VC firm to review, right? And we never send that back to startups, so they never get to see what we actually think about them. And a few VCs really give any feedback anyway. So I thought about working around building a workshop and a series of tool that allows founder to build investment memorandum. I call them VC audit because not everybody understands the concept of VC memorandum, but VC memos are essentially a complex audit that we run on early stage companies, at least for me, right? And
Hmm.
and the idea is that now I provide that to companies, and many founders really like the idea of being able to see what VC actually think. Because in the end of the day, when I run accelerators, when I do mentoring or advisory, I pretty much answer always the same question, right? How to be a VC case. So that's what I mean by that, and it's the output of thousands of cases that I had to reject over the last 10 years of working in the VC space. Fix it before pitching to anyone. Get that VC audit for yourself, and get to understand how VCs are looking at your case before pitching anything. Because you'll get your narrative, you'll get your pitch all right. And the puzzle is going to get together that way. And too few founders really understand the VC mechanics. That's the idea. Does it make sense to you?
Yeah, it certainly does. That it certainly does make sense, but it still raises a bunch of other questions that are going to be connected, and they're just starting to pop into my head right now. Tell me something, Kevin. You have been on both sides of the table as a venture capitalist and an angel investor. So I'm curious, what is the single biggest misconception that founders have about what investors are actually looking for?
Yeah. So first, I actually run an investment club out of the UK called the Collective Club. We can dive into that later, but the big misconception is connected to what I was just speaking about before. Many founders think that VC money is funding an idea or funding a business, but it's a lot more complex than that. I guess that whether you are an angel investor or a VC, you're ultimately looking for fund returner or larger multipliers in your investment opportunities. From a VC standpoint, um, you cannot just come up on pitching an idea without depth in terms of distribution or go to market, and that's one big mistake that I see. Founders are coming in with bright ideas, but they never dive so deep onto
Mhm.
defining a distribution model that allows for a level of scalability that makes sense in the context of VC mechanics. And from an angel investor perspective, in the end of the day, it's the same thing because angels might not be looking for the same return profiles, but it's very likely that a company that has been funded early by an angel will eventually require VC funding for continuous growth down the line, and therefore will need to have VC scalable modeling behind. I guess that's one thing that I highlight a lot is the depth of the distribution model, especially in the context of the AI era, where everything goes fast, everybody's building nowadays. So it's a lot more about distribution than technology. The tech used to be a moat, now distribution becomes a moat, if that makes sense. I
Mhm.
think that's the way I look at it. And that's one advice that I would give to any founder is dive deeper into modeling a business model that fits the scalable VC thesis.
Right, right, exactly. Well, first of all, thank you for elaborating on that part. I'm curious about something else. I mean, we have like privately talked about ugly baby, right? But I'm sure that most of the public, a lot of folks who might be watching right now, don't know exactly what ugly baby is. It's an interesting name to say the least. But what is ugly baby, and what moment in your career made you realize that founders needed something like it?
Do you know what an ugly baby is in that context?
Please.
It's a startup, basically, right? I mean, like the story of ugly baby. Once more, I was running workshops. I was actually in Armenia a few months back, 4 months ago or something, running a workshop for Plug and Play. And
Uh-huh.
the typical workshop that I run, I call it "What the hell is a VC?" Where we dive deeper into the economics of VCs, anyways. And I was like, let's put together a basic Chat GPT prompt system that would allow founders to come out of the workshop with their very own memo. You know, how to define a problem, how to define a solution, how to define the business model, whatever. So I had built that prompt for that workshop, and people loved it. Turns out that the week after, I was flown to Albania to run another workshop, and between the Albania workshop, I had a weekend that I wanted to take on the seaside because Albania is a coastal country by the Mediterranean Sea. So I was expecting palm trees and sunny weather. What everybody was freezing out here in Estonia. Turns out it was rainy, super ugly weather. So I just spent the weekend indoors, and I turned that basic prompt into a fairly solid platform that
Hmm.
productized that prompt of mine. I essentially leveraged hundreds of investment memorandum that I had written. I trained my algorithm to be able to think like I do, so that anybody coming onto my platform would basically upload their deck, answer questions, tailor-made questions, and then the machine would be able to generate at first a basic investment memorandum, like 8 pages or whatever. That idea grew a lot. That was in whatever December last year. That idea grew a lot. I started to add a lot more. It became a 20-page audit on, kind of explaining what to do, what to fix, how to calculate your ACV, how to define your pricing, and essentially providing however many hours of mentorship and advisory I would be spending with the company, but the entire Kevin Chavanne AIs, if you will, right? From a VC standpoint, at least. Grew that, got about 200 customers, got the feedback I wanted, and I started to kind of onboard VCs. With our investment club, we started to use my algorithm to run VC analysis, right, in our investment memos and stuff. So I started to onboard VCs. Um, Started to list out all of my VC network as well, so that founders who join and get their VC memo, now that they understand how to frame their concept, might as well be able to reach out to my network. I kind of went on a crusade of helping early stage founders, and it turned out to be like a full operating system called Ugly Baby, where founders will understand how to frame their business as a VC case, and understand what are the weaknesses, understand what our VC is going to be asking, understand the markets behind whatever they're doing, because I kind of like scrapped for market analysis, VC market analysis, VC market reports, fed that to the AI. So, you can gauge on valuations, on exit scenarios, on what are the VCs around you kind of investing in. Listed
Mhm.
out over 2,000 VCs of my own network on the platform, business angels, grants, you name it. I even kind of like built a library of legal templates that I templated based on whatever I had at hand, and
Mhm.
kind of like use that a lot in my workshop and tell founders with whom I work, just, sign up on the platform. It's $20, whatever, $30, and you get a full-fledged operating system. And I called it Ugly Baby at first as a joke. The website is called the website is actually brain.com. It's not even Ugly Baby, right? I will have to think about changing because I'm at over 500 users now. So I need to kind of like start doing something with it. But that's how VC Brain kind of came in place. You end up answering the same question in mentorships, in advisory, and in pitching competitions. So why not turning it into a product that people can self-serve? It just requires the time of the founder to actually sit down and start reading. You know what I mean? Which
Mhm.
nowadays people are a little in a constant rush with these TikTok trends of swiping. But that's how it came about. That's what Ugly Baby is. Showing good traction, showing good momentum, and kind of like I'm having fun discovering AI with that.
Well, the name certainly is unforgettable. So
Yeah,
that's a good start. Okay, so
yeah,
let's talk. I mean, we have. I mean, there's so many things I wanted to ask and talk about and discuss, but we have limited time. But I have. Um, I wanted to ask you specifically about operation, something about operations. So you correct me if I'm wrong, but I think you led Nordic operations at Tenity, the venture arm of the Swiss stock exchange, right? So how does investing through a financial institution shape the way that you evaluate technology companies differently than a traditional venture capital would?
yeah. It's a good question. It's a good question. Um, so I was indeed as part of the VC team deployed in the Nordics. I was the only VC person in the Nordics for Tenity that is based in Zurich at the Swiss Stock Exchange, right? Um, in the VC space, you often have what we call CVC, corporate venture capitals, which are usually evergreen investments out of the balance sheet from corporate companies. We're not that. We're fairly independent from the corporate the corporation itself. Did we have any specificities in our investment strategy? I don't think it was that different from any other VCs. The main thing that I think was a little bit different was that we worked a lot with the innovation departments of our LPs, whether it is the Swiss Stock Exchange innovation department, whether it was UBS, the bank innovation department. But we had a constant, ongoing stream of communication with their team in house to better identify the problem that their teams were facing, so we could find solutions. I always felt a little bit like the infantry on the battleground, kind of like going to pick up intels and finding cases that are suitable for real life problems within corporate companies, right? So that was one thing that was a little bit different. The idea of following a roadmap of partners of ours, number one, but having the intel of understanding what are the recurring issues within those organizations, and therefore sharpening our sight with identifying what are the real problems and what is the vanity, what are random. So that was cool. And another aspect that is actually very useful in the context of what we'd be doing was that because we were targeting companies that were solving problems within corporate companies, partners of ours, we could literally take those companies and bring them to the innovation department and often create, POCs or anything, right? So I think these are mechanics that you don't always find in fully independent VCs, but having that access with our LP relationship was very useful. Um, from that perspective. Yeah.
And also, this is something that I was also reading about you and the information that we shared that I think it's worth mentioning. You founded the collective club around the idea of fewer vanity rounds. By the way, this is the way that collective is spelled is with a K. Collective,
Yeah,
K, right? Collective
we do
club.
things different.
You'll have your chance to tell us why you chose that spelling, but that's fine. So you founded the collective club around the idea of fewer vanity rounds and more disciplined companies. So what is a vanity round in the first place, and why is it so damaging to a startup's long-term trajectory?
Yeah. So I don't know whether we build the collective club specifically for issues towards vanity rounds, but in a few words, vanity rounds are essentially surfing a hype of overfunding your business for, I guess, media outreach and media communication, and that sets the bar really high. That will likely have an impact on your valuation, probably overvalued. Therefore, you'll have to commit to outputs if you really want to not down round down the line. um, I think the story behind the collective club is a little bit more straightforward, actually. Like two friends of mine, Ryan from the UK, Manon from France. These guys have been in the sales for years. They have very successful exits, and they wanted to provide an opportunity to their peers to join hands-on investment opportunities. Like operators are super important in the context of investment because they have network, they have skills that could be deployed together with the capital. So they had that initial idea and they called me in because I had the VC network, right?
Hmm.
And my promise with the collective club is that because I've built a solid VC network over the years, I get opportunities in investing in certain cases that are already backed by VCs at slightly later stages. So we can enter with smaller tickets and bring in angels that do have an operational skill, and a network that will allow seed companies to really thrive at that stage. So that was mostly the promise. Now the vanity metric aspect, the vanity round aspect, is is that we just don't support people who are overhyping on their valuation or whatsoever. I'm not saying that we hate on them or whatever. Just saying that we try to be as grounded and try to follow pure VC logic when we're investing rather than going for herd mentality strategy, if I can put it that way.
Uh, Yeah, I mean, in a way, one of the things that I can tell you right now is that I'm still trying to figure out. I've heard the word vanity in different spaces, like vanity metrics and things like that. But I've never heard about vanity rounds, right? So this is very enlightening to me in the first place, and I'm sure that to those who might be watching or listening in. But I think it's also valuable that you're pointing out why it's damaging for a startup?
Well, yeah, I mean, I think it's more of a
Yeah,
random thing that we came up with. You know what I mean?
yeah,
Rather than any pure strategy aspect.
yeah.
Yeah, usually you hear a lot more about vanity metrics rather than vanity rounds.
Yeah, exactly. So, listen, there's something else that I wanted to ask you is shifting direction a little bit. It's about legacy systems. So, legacy systems are everywhere in financial services and insurance. So, when you're evaluating a fintech or insurtech startup, how do you assess whether their technology can actually survive contact with the legacy environment?
Yeah, it's a very good point. I was actually looking quite deep onto a company from Finland, which was working on mainframe ecosystem for insurance companies, very complex stuff. To be very straightforward with you, it took a very long time for me to understand the technological aspects of businesses. I'm not a tech guy by background. I started to really get into AI and run my models and stuff only like a few years ago. Um, so generally speaking, my tech assessment has never been valid enough to justify an allocation of money. Therefore, always relied on third-party tech consultant that worked with us on an ongoing basis to, validate the tech. Number one, um, um, and number two, when we'd be running any form of due diligence, even at earlier stages, I guess the fact that we are able to work with innovation department of partner corporate companies that I mentioned earlier, that would allow us to, kind of test things out before committing to full rounds. And oftentimes, I end up spending a lot of time speaking with either customers of those startup companies to assess the veracity and the legitimacy of the tech behind, and often look into POCs, to be honest. Like so many cases
Mhm.
of I spent hours chasing after whatever XYZ department in XYZ banks or XYZ insurance companies to ask them how is the POC going, what are they doing, how will you see the future with that company or whatsoever. Just spend an enormous amount of time running after people who are completely unrelated to what I'm doing and ask them question on how is their experience with working with whatever early stage POC, right? I guess
Okay.
that's been the challenge
Yeah.
indeed. Yeah. Yeah.
Yeah, yeah, absolutely, absolutely. Kevin, we're running out of time, and I still have one more question that I think it's important that we ask it. Is what is, in your opinion, the one thing that a startup can do in the next, let's say, 30 days to meaningfully improve how an investor perceives them without
Yeah.
raising a single dollar?
Yeah. I mean, I think what you're asking is literally the crusade I am onto, which is like I advise and I urge any startup company, any founder, whether CTO, whether CEO, whatsoever, to spend some time trying to understand the VC language, to understand the VC expectations, and to spend time, whether it's on my platform or anywhere on the web, to understand what is the depth of what how to define and how to properly narrate your business and turn it into a VC case. That will open so many doors for you. Just the fact of having a company asking who are the LPs of my fund to understand what's the relationship and what are the potential upsides, this changes the whole game, right? Always remember that we are essentially looking for very high returns. So whatever you're modeling has to follow a roadmap that takes us to very high returns within a given amount of time. Fund cycles are what, 8 to 12 years, whatever. Within that timeline, you need to basically be a unicorn. So if you learn how to explain that and how you get there, I swear to you,
Mhm.
you'll have a lot more positive response.
Absolutely, absolutely. Kevin, let's wrap this up with your own final words of wisdom. So, what would you like to leave the audience with to remember you by in this in this podcast?
Great question. I mean, I think I want you guys to remember me as the guy who came onto a crusade to teach everybody how to access investors and how to unlock that language, that narrative that so many startups are missing.
There you have it. There you have it. That's worthy enough. So, how can people, for those who are watching now or will be in the future in the recorded version, how can people get a hold of you? LinkedIn, email, website, everything, whatever you got. How can people get a hold of you?
Yeah, I mean, I'm pretty active on LinkedIn. My name, Kevin Chavanne. I think there's another guy called Kevin Chavanne from my hometown in south of France. But I mean,
Hmm.
you'll recognize the beard. I don't think he has a beard. My website,
It's right there, by the way,
vc-brain.com.
folks. I think that's your LinkedIn
Looks
handle,
like,
right?
yeah. Looks
Kevin
like, yeah.
Chavanne. Yeah.
1B8A3688. Yeah. And my website, vc-brain.com. That's where you find all the resources, all the blogs that I'm writing, all the investors that I know, all the angels that I know. Everything is out there on the website. Go and have fun. Give me feedback. I love it.
What is the
And
website? What is the website again, Kevin?
VC, VC-brain, like brain, vc-brain.com.
.com. Okay, so it should be. I'm just putting it out there for those of you who could be watching. Just make sure to write it down. vc-brain.com. Is that correct?
Here you go. That's correct. You guys can go and get whatever I can provide. Feel free to reach out. Um, and thanks a lot for having me. I mean,
Absolutely.
cool
It's our
stuff you guys are
pleasure.
doing. Yeah.
Yeah, absolutely. It's our pleasure, Kevin. So again, thank you for having been with us on the show. And stick with me as we go off the air. And the rest of you who are watching, please remember that every Wednesday we have an Advancio Tech Talks episode with tech luminaries and other business people from the tech world and otherwise. So usually at 11 o'clock Mountain Standard Time. This time we did a little bit earlier to accommodate Kevin's availability and I mean geographic availability because he's like many time zones away. Thank you, Kevin, for staying up with us so late. So, but it's usually just go to the website. I mean, the website, the founder of the sponsor of the show is advancio.com. So you go there and you'll find everything you need to know about the show. And it's every Wednesday at 11 o'clock Mountain Standard Time. We have something for you. So that being said, thank you, Kevin, and thank you, everyone. And I'll see you next week. Thank you.
Thank you.